Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into the semi-annual shareholder report for Vanguard Trustees Equity Fund. And trust me, it's surprisingly interesting unless of course you come back reading pages and pages of legal disclaimers and accounting jargon. This report gives us a look at how Vanguard International Value Fund and Vanguard Diversified Equity Fund have performed over the last 6 months, who's running the show and where they see things heading. So buckle up because we're about to break it all down. Before we jump in, if you like having corporate paperwork turned into crystal clear insights, hit subscribe. We've also got a Discord community linked in the description where you can chat with fellow finance fans, so come join the party. Scroll is a reporting period, November 1, 2024, Accused April scroll. First, let's set the stage. This report covers the period from roughly late fall of last year to the end of April this year. It's basically a mid-year checkup to see how these funds are doing. Scroll app contents cost scroll. The report focuses on 2 funds, Vanguard International Value Fund and Vanguard Diversified Equity Fund, both of which are aimed at different investment strategies. That is, they invest your money very differently from each other. Starting with the Vanguard International Value Fund, or VTRX, we will focus on the investor shares part CAD. It's all about finding undervalued companies in other countries and betting that they'll eventually get the recognition they deserve. Think bargain hunting, but on a global scale. Basically, they invest in what seems like cheap international stocks. So, how much does it cost to play this global value game? For every $10,000 you invest, it'll set you back about $18 or 0.35% annually. This is the expense ratio, or how much of your investment goes towards running the fund. Scroll Fevund net assets ACOT in millions. Ed Scroll Fixed Fund is pretty huge that manages around $11.6 billion. The board concluded that the fund's expense ratio was below the average expense ratio charged by funds in its peer group, and that the fund's advisory fee rates were also below the peer group average. Where is that money actually being invested? Well, about half of it is in Europe, with a good chunk in Asia and smaller amounts in North America and other parts of the world. It's a very diverse portfolio, and this gives a better idea of how they allocate your money geographically. Scroll Leave Fund files its complete to schedule of portfolio holdings scroll. If you're curious about the specific stocks, you can check out the fund's complete list of holdings on the SEC's website. This gives a comprehensive list of what investments they hold. Scroll Derivative Financial Capital Instruments outstanding as of period end scroll. To fund also uses some financial tools called derivatives to manage risk and enhance returns. These include things like futures contracts and forward currency contracts. It's a bit like using options in the stock market, another way to increase or decrease risk. Let's take a quick look at the statement of assets and liabilities to see what they own and what they owe. We see total assets of about $11.7 billion versus one it owes someone $19 million in liabilities. Actually, it is basically what it owns versus what it owes someone else. We also see how many shares of beneficial interest there are, plus the net asset value per share. Scroll dividends, quail in a scroll quos HT 40. Dividends generated about $158 million, or about 1% of the whole fund. That's their income from investments. These numbers are, of course, before expenses. We see a realized net gain of about $140 million. But note that we also see something called change in unrealized depreciation, which in this case means a loss. They took a loss at that moment because several investments went down, leading to a situation where the total net increase in net assets was about $219 million too. This measures how the fund's value changed over the last 6 months. Over the 6 months, about 15 million shares were removed, showing more shares were redeemed than bought. This could be because of poor performance or that more people withdraw from the fund than buy. The financial highlights show that the 6-month total return was 2.04%. This is how much the fund has decreased in the last 6 months. Switching gears to the Vanguard Diversified Equity Fund, or VDQX. This fund takes a different approach. Instead of picking individual stocks, it invests in other Vanguard funds. It's like a fund of funds, giving you exposure to multiple strategies in one go. The costs here are similar, where a $10,000 investment will cost you $17 or 0.34% annually. These investor share costs are on par with VTRX funds. This fund is a bit smaller, roughly $2.6 billion in net assets. Looking at what makes up the portfolio, we see that the biggest slice is in the Vanguard US Growth Fund, followed by Growth and Income Windsor and Windsor 2 and other additional funds. That is where they are allocating their money. Assets-wise, the Diversified Equity Fund holds about $2.6 billion, with liabilities of just under $2 million. Taking a peek at their operations, their income distributions from affiliated funds plus net investment income totals about $17 million. This again is income coming into the fund from the underlying investments. Looking at the net increase or decrease in shares outstanding, the 6-month period saw a net decrease of almost 2.7 million shares. Very similar to the International Value. The bottom line that everyone cares about is a negative return of 2.96% over the last 6 months, a bit worse than the International Value Fund. There is a statement where their principal executive and financial officers stated that their disclosure controls and procedures are effective, based on their evaluation within 90 days of filing this report. Just good to note that they are being compliant with filing the report. It's also noted that the trustees approved advisory arrangements as they do every year. They made the decision that it was in the best interest of the fund and its shareholders to continue these arrangements. Now, stepping back to look at Vanguard's two funds, here's my take. Overall assessment show, I believe Vanguard to be solid but not impressive where the returns are on the low side. I believe average investors could do better elsewhere. The International Value Fund seems more attractive due to its higher return and geographic diversification compared to the Diversified Equity Fund. Of course, it all depends on your personal decision, but I would advise you to allocate your money somewhere where funds generate greater returns. Potential pitfalls. Remember that investment comes with the risk of losing money and nothing is certain, so it's your choice. Final verdict also, there's all kinds of funds available and all kinds of performances between them. Maybe Vanguard is for you, maybe it's not. Alright, that was a breakdown of Vanguard's mid-year report. What do you think of these funds? Are you considering investing or are you already a shareholder? Drop your thoughts in the comments. If this analysis was helpful, smash that like button and subscribe for more corporate deep dives. Also, don't forget to check out the Discord channel in the description for more finance talk. Thanks for watching and I'll see you next time.